Gold has ruled money for over 5,000 years. Crypto, on the other hand, is barely 16 years old, yet it has already shaken global finance. One is ancient, the other futuristic. One is trusted by kings and empires, the other built by anonymous coders. But when it comes to protecting wealth, which is the real safe haven, gold or crypto? In this video, we'll explore the full story. The history, the psychology, the performance, the risks, and the future of both. By the end, you'll know exactly which asset deserves your trust, gold or crypto. For centuries, civilizations have turned to gold. Egyptians buried their kings in it, believing gold had divine power. The Roman Empire minted gold coins to symbolize stability and strength. In India and China, families passed down gold jewelry for generations, not just as decoration but as real savings. Why? Gold had unique qualities. It was rare, impossible to fake, and indestructible. Empires fell, currencies collapsed, but gold always held value. Even in the modern era, gold shaped global economies. For more than a century, nations tied their currencies to the gold standard, meaning every paper dollar could be exchanged for real gold. Even after the gold standard ended in 1971, gold never lost its shine. Central banks still hoard it. Investors still rush to it when markets collapse. Gold's reputation as a safe haven wasn't given. It was earned, over thousands of years of survival. Then came 2009. A mysterious figure named Satoshi Nakamoto released Bitcoin, the world's first cryptocurrency. It was revolutionary. No banks, no governments, just a decentralized digital system. Bitcoin was created to solve a problem: trust in money. After the 2008 financial crisis, when banks failed and governments bailed them out, Bitcoin promised something different. Money controlled by mathematics, not politicians. Supporters call Bitcoin digital gold. Why? Because like gold, it has limited supply. Only 21 million Bitcoins will ever exist. You can't print more. You can't fake it. And you can send it anywhere instantly. But crypto is not just Bitcoin. Thousands of cryptocurrencies have been created, from Ethereum to Dogecoin. Some power decentralized finance and smart contracts. Others are memes, jokes, or scams. In just over a decade, crypto went from an experiment to a multi-trillion-dollar market. But it also became a roller coaster, soaring to incredible highs, then crashing down with equal speed. Unlike gold, which has thousands of years of history, crypto is still writing its story. Safe havens are tested in crises. Let's look at gold first. During the 2008 financial crash, when banks collapsed, gold prices surged. In 2020, during the pandemic, as uncertainty spread, gold again hit record highs. Gold thrives in chaos, because people trust it when nothing else feels safe. Now, what about crypto? During good times, Bitcoin and Ethereum skyrocketed. In 2017, Bitcoin went from under $1,000 to nearly $20,000. In 2021, it touched $69,000. But in downturns, crypto crashed, sometimes losing 70 to 80% of its value. When the pandemic hit in March 2020, Bitcoin fell almost 50% in a matter of days before recovering. The difference is clear. Gold is stable in crisis. Crypto is volatile. It can rise dramatically, but it can also collapse overnight. If you want wealth protection, gold has the better track record. If you want growth with extreme risk, crypto offers that possibility. The question is, do you want a shield or a high-stakes play? Gold's greatest strength is its ability to hedge against inflation. When the value of cash falls, gold tends to rise. Take the 1970s. Inflation soared in the US, and gold prices skyrocketed more than 10 times in a decade. Crypto supporters argue that Bitcoin is also an inflation hedge. Its supply is capped at 21 million coins, and every 4 years a halving event makes new supply even scarcer. In theory, this should make Bitcoin resistant to inflation. But here's the catch: Bitcoin hasn't existed long enough to prove this theory. In fact, during recent inflation in 2021-2022, Bitcoin crashed while gold stayed relatively stable. Gold has centuries of proof as an inflation hedge. Crypto has a promise, but not yet the track record. That's why many investors see gold as protection, and crypto as speculation. Let's compare the risks and rewards. Gold is slow. It doesn't generate income or dividends, but it's steady. It doesn't collapse overnight. It's almost impossible to destroy or counterfeit. Crypto, on the other hand, is exciting but dangerous. Yes, people have become millionaires overnight with Bitcoin, Ethereum, and even meme coins. But people have also lost everything in crashes, scams, and hacks. Unlike gold, crypto is unregulated. If you lose your coins in a hack, they're gone. If you forget your wallet password, your money disappears forever. So the question is, what do you value more, safety or opportunity? Gold protects wealth you already have. Crypto gives you a chance to multiply wealth, but also a high chance of losing it. In other words, gold is a shield, crypto is a high-stakes bet. What does the future look like? Gold will always be trusted. Central banks continue to buy it. Nations like China and India are increasing reserves. Even in a digital world, gold's physical power gives it unmatched stability. Crypto's future is more uncertain, but also more exciting. If governments adopt digital currencies, if blockchain technology grows, crypto could become part of the financial system. But it could also face strict regulations, crashes, or even obsolescence. The most realistic future may not be about choosing gold or crypto, it may be about owning both. Gold for protection, crypto for opportunity. One anchors you, the other gives you wings. So, gold versus crypto, which is the real safe haven? The truth is, gold is trust. Crypto is hope. One is ancient, the other futuristic. One protects, the other takes chances. Together, they may define the future of money. Now I want to hear from you. Do you trust gold, or do you believe crypto will take its crown? Comment below and don't forget to like and subscribe for more videos on wealth, money, and the psychology of finance.